Hey everybody, Chuck Barone. It's Thursday, June the 22nd, 2023. Big day, lots to talk about today. We got Powell up on the Capitol Hill in the Senate today. Had a lot to say today, very interesting stuff. But before we get rolling, let me welcome everybody to the show. Nice to have you guys here with us again. Let you guys know, of course, again, how much we appreciate your support, how much we appreciate you guys watching the videos and all you do for us to support the show. Couldn't do it without you guys. We appreciate it. All right, so let's look at these markets today. So as we know, we got a couple of big things that happened today. We got the unemployment numbers, we got existing home starts, or existing home sales, and we had, of course, the highlight of the day, Jerome Powell, St. Jerome himself, the miracle worker from Jekyll Island, up on the Senate today. Usual dog and pony show up there, but he had quite a few things to say, which we'll review here in a little bit. But let's look at these markets today. So we know Powell was the big driver. Unemployment numbers, moving markets. So the markets ending mixed today, though, with the Dow falling just 4 points, 33,946 on the Dow, with the S&P and the NASDAQ both gaining today. The S&P up 16 points to 4,381 on the index. The NASDAQ jumps 128 points today, 13,630 on the NASDAQ. So, the broader markets looked like they, the news we got today on unemployment, on existing home sales, and what Powell was saying, not spooking this market as bad as the speculation leading up to it did. So the market's ending mixed, but with not a negative note to it, so that turned out okay today. Now the bonds, on the other hand, the bond market selling off today. Not liking this. It sounds to this market like the Fed's pretty serious about keeping rates going through the end of this year, keeping rates higher and raising rates. The 10-year jumps 7 basis points, 3.80%. The 2-year jumps 8 basis points, 4.79%. So now we're 1 basis point away from a 100 basis point inversion. I think the record that I can remember from this most recent inversion was 114 basis points, so we're nearing that now. As we know, an inverted yield curve is a signal that a recession is coming. Now, we had the big false one last year, so I'm kind of reluctant to say that. It seems like the economy is going along okay, but as you guys know, I'm not a believer in this whole concept of a soft landing. You're either having a recession to bring in, the inflation down to 2%, or you're not. So we'll see where it goes, but the bond market today not liking the news. The dollar today talks of higher rates, of course, spurring the dollar on. Dollar just has a small gain, 102.42 on the dollar index. So just, dollar strong, has stopped the reversal it had. It was just up a couple weeks ago, up over 104. So showing a little bit of strength today. Metals, gold and silver, tough day today. Not a good day. Silver really, gold takes it in the shorts today, down $18.80 per ounce, $1,913.80 for an ounce of gold. Silver down 40 cents per ounce, $22.25 for an ounce of silver. So these metals prices coming down a little bit from their peaks. I still think that I'm feeling pretty bullish about gold and silver. I think that, in spite of what the Fed says, they're going to have to deal with economic reality. And I don't see economic reality pointing to a super strong dollar. So I think ultimately you're going to see gold and silver rally. Oil today down, not a good day for the oil market today. Down $3.07 per barrel for West Texas Intermediate, sitting at $69.46 per barrel. It's happening exactly like I've been telling you guys it will. Oil seems to be wanting to be in this trough between $70 and $75 per barrel. As soon as it starts to break out up or down, it reverses itself very quickly. Yesterday it looked like oil was going to rally, couldn't even break above 75. Today, here we go, boom, right back down, sitting just under $70 per barrel. Bitcoin up again today, not as big, but still up $230. Bitcoin sitting 30,161, a great rally continuing. Happy for all of you guys watching this show that are Bitcoin holders. I know that a lot of you guys are big and small holders. Going to make a little bit of money on this. This Bitcoin is showing some real strength in the face of real adversity. Now we'll see. I saw a couple of things. I didn't get a chance to really do research, but I saw that BlackRock is now getting involved with Bitcoin. I saw they're talking about a Bitcoin EFT. Bitcoin in the news, and for a change, not in a negative way. All right, so let's talk about news today. So we knew the big news we were going to get would be Powell in the Senate, and we get that unemployment report, which we got this morning. Coming in, 264,000 from last week. It's basically the same as last week's upper revised number. This is the third straight week in a row of rising claims. So what do you guys think? I mean, they were expecting 260,000. They got 264. I think the market's softening a little bit. You think these jobs are real? I don't know. It's been interesting, but as we've been saying here, the job market is Powell's #1 target. They believe that hot jobs are what's keeping the wages rising. Ooh, gonna sneeze. Are what's keeping wages rising, and obviously they're concerned with the wage price spiral. So Powell looks like he's having his way. Claims for unemployment are up 45% from last September, which was a low since 1969. But truthfully, 264,000 is a number that's still considered, anything under 300,000 is considered a healthy jobs number. So the job market, while not as robust as it was just last year, still pretty healthy overall. And I think that continues to put pressure on the Fed to keep rates higher and maybe continue to raise rates. All right, so let's talk about Powell today. He sits in front of the Senate now. As you guys know, and I've been warning you guys, these hearings on Capitol Hill with Powell are always the big dog and pony show. It's always a lot of drama and posturing. Powell actually trying to talk business, give the public and the Congress some real information. But these politicians, they can't help themselves. It's all about posturing and looking good for the camera, getting that soundbite in that could get you in the news that night. It's crazy. So what did Powell talk about? The main thrust that I took was they're talking about 2 more quarter-point increases coming up this year. Powell himself, when asked about these 2 quarter-point increases, said it sounded like a quote-unquote good guess if the economy stays like it is, if the economy doesn't start really tanking. 2 more quarter-point increases this year sounded to Powell like a good guess. Powell said that the Fed is now in a meeting-by-meeting, data-dependent phase of the tightening campaign. So now, they kind of had it in their minds. They knew they wanted to hit that 5% target. Told us. Did it. Well, now I guess they've shifted from that. Now that they've hit their target, to a month-to-month, where every month, depending on the data they get, and of course the arguments that are made at the table there, will decide what they're going to do at that meeting. Now the consensus on Wall Street is already talking about another quarter-point increase coming next month in July. As we all know, the Fed chose to pause this month, not raise rates, holding rates steady at 5.1% overnight. So another quarter would put them at 5.35%, then another bump toward the end of the year, getting them to the 5.6, which is what sounds to me from Powell's testimony today where they want to be. Now this should make for a pretty interesting open market committee meeting, because we've had a couple of Fed people out talking about holding rates steady for longer to see the true effect on the economy and how it works with inflation. And of course, you still got the Fed hawks talking about, we know it's not enough yet. Inflation numbers are really high. They're sticky. They're stubborn. They've got a whole bunch of different adjectives they use. So it should be a pretty interesting meeting. I don't think we'll get many details, right, of that meeting. But I'd like to be a fly on the wall because you're going to get a lot of mixed opinion in there. Most of these Fed governors are not, without ego. And I think this could be a little bit closer vote between hiking again and holding. It's going to be fascinating stuff to watch it because now the Feds, now they're up against it. Now the fork in the road's coming. Time to decide, economy or inflation. It's still focusing on the unemployment rate. The Fed's still targeting a 4.5% unemployment rate by the end of the year. And that's up from 3.7 right now. So that's a pretty big jump from where we are. The jobs market, while softening, they're going to have it soften quite a bit more to get to 4.5%. Powell said that a strong majority agree with the idea of 2 more rate hikes this year, but that the Fed, here's the quote, is trying to avoid the mistake of going too far. And the question he was posed to him about, is it possible to get rates where they need to be to bring inflation back to 2% and not toast the job market? Powell said that that was possible. He said the Fed would be moving at a careful pace, meaning they have no idea what the hell's coming. Said the Fed is working with smaller banks right now on commercial real estate loans, which is hallelujah. I'm glad he said that because that's the big catastrophe everybody's waiting on. As I've told you guys on the show, we have $1.5 trillion in commercial real estate loans coming due between now and the end of 2025. All of these loans typically are not paid off. Okay, they're typically refinanced, and it's going to be crazy because you have the borrowers who own these buildings. A lot of empty space there, right? You got the banks who want their money, going to be asking for significantly higher interest rates on these loans. Commercial real estate, is all about cash flow. So when you have empty buildings, obviously that affects your cash flow pretty dramatically to the negative. So it's going to be fascinating to see, can they even refi these loans? Do they have the cash flow to support not only the existing loan they have, but a loan with probably double the interest rate that they had previously? It's brewing. I'm glad the Fed is on the scene with these banks because the last thing we need is a series of small bank failures where now you still got the JP Morgans of the world coming in, gobbling up all the valuable assets, and you and I get stuck with the bills and all the crap that's left over. So glad to know the Fed is on the job. Now we'll see, on the job and actually doing it is different, I guess. So we'll see what they come up with to solve this because you're going to have tenants who aren't going to want to refi. You're going to have tenants who can't refi that do want to. They're going to have a pretty solid plan in place to deal with this. Of course, again, going back to our politicians, are they asking really sensible, smart questions? No. What they're playing is this gotcha game that they're all about. Trying to get Powell to make a mistake, trying to get him to, make an error or whatever in what he says, or get the scoop, so to speak. And it turns what could be a very informative session, could be very helpful to investors, into just a political game stunt, which is what that's all about these days. Anyway, guys, that's it for the day. We'll be back tomorrow to wrap up this week. It's been a zany one. By the way, existing home sales did jump up to 4.3 million units annually. They were expecting a decline to 4.25 million units. Still down, though. Existing home sales still down 20% from where they were last year. Well, it's all about interest rates. Anyway, that's it, guys. We appreciate your support. Please hit the like button. It helps us with our algorithms, helps get the video out in front of more people. We'll be back tomorrow to wrap everything up for you guys. Till then.